This is a quick Ichimoku analysis for the Euro US dollar spot. Here on a daily chart, our current price is above the cloud. We are below the red line and we are above the blue line. Our short-term trend is determined by the red line. When market price is above it, it's bullish. When it's below, it's bearish. We're currently bearish. Our medium-term trend is the blue line to the red line, and right now with the blue line being below the red, our medium-term trend is bearish as well. Our long-term trend is the current market price to the cloud, and being above the cloud, we are bullish. If price action does come down and challenge the top of the cloud and move inside, then our long-term trend will be neutral. It will not go bullish or bearish until there's an exit to the cloud. To the downside will be bearish and to the upside will be bullish. Right now our current market price is inside a channel below the red line and above the blue line. This is a bearish channel. We did have a long bullish channel here at the beginning on this chart, and market price rode up on the outside of the blue line for quite a ways before it fell through, crossing underneath the red line, and then the market action causing the blue line to be pulled down below the red line. Right here where the blue line crosses below the red line was a bearish signal. However, underneath we do have a morning doji star right here, and that is a little bit of possibility of a turnaround, which we have seen happen. So we'll have to see how long that turnaround can maintain itself, and we'll see if market action can stay above the cloud. That's the next thing that we're going to be looking out for. Taking a look at our lagging green line. The green line is market action plotted 26 periods in the past. As market action fell, it pulled the green line down and into congestion. Now, the green line can have support and resistance the same as current market price. However, it also can be an anchor on market price, the current market price, if the green line gets caught up under one of the other lines are in congestion. So right now it is caught in congestion, so it is a bit of an anchor on our current market price. Right now, the green line is running in tandem with the blue line right here, and we'll have to see if it can get above market action or not. Here is the cone of possibility, which shows that we could be running into the red line here fairly soon. And then if market action falls into the cloud and we see that the lagging green line comes down and challenges the top of the red line here could be supports for our current market action. We also have a flat line on the front of the cloud up here, and so that shows us that our zone of support falls about in this area. So you can see the front of the cloud where it's flat, all the way back to the flat of the red line, and it also matches up with support where the doji was stalled. So this is going to be a support level if market action does come and penetrate inside the cloud. Our next line of support will be our flat line on the front of the cloud, which pulls back, showing that we do have a little bit of support underneath our first line of support, and then we'll have a third line of support at this level and a fourth line of support at this level. We also have the blue line, which could provide support and keep market action from falling too much below it. If we do fall below the blue line and below this line of support, then we will be seeing a more bearish situation. If market action can stay above the blue line, can stay above the top of the cloud, and then move up above the red line, then that will be a bullish situation and could be a time that you might want to initiate a trade if the rest of your analysis agrees with it. So the first bullish move will be if we can get above the red line. The second bullish action will be if we can continue up enough so that the blue line crosses back above the red line. This is your quick Ichimoku analysis for the Euro US dollar spot.